Good evening, everyone. This is Financial Literacy 101, and this evening we're going to talk about MicroVision. It's funny, I did the stock review today with MicroVision, and just going over some notes that I've looked at in the Wall Street Bets group. This again is another one of the stocks that MicroVision absolutely short squeezed. Okay, this is one of the stocks they're going after, and as I showed you in my earlier video of my stock review, I only had like 70 shares, and I should have bought a lot more shares, and I should have absolutely kept this particular stock, but I got rid of it, not knowing what's going to occur. But this particular stock has a lot of potential, has a lot of potential for profit. I mean, that's a lot of money. Okay, that's essentially a lot of money. We should be counting the dollar bills here and there. But the one thing that I should have done today that I didn't do, I'll let I should have bought more stock. I mean, truly, I should have bought more stock with this particular investment here, because I'm just choked up about the amount of profit that I would have gained if I would have just bought more money. I would have bought more stocks today. When I look at this particular stock and I see all the potential that the stock absolutely has, I know that I missed out. So as I'm still setting up here, I'm going to let you see exactly the potential profits that you and I have missed out by not taking the advice. Now, I invested, I believe it was $500 in this particular stock. I believe I invested $500. But there was a lot more room for us to make even more money when it comes to the stock, because I believe as we're looking at this, okay, as we're looking at this particular stock, and you see today 47% during the live market here, okay, 47% during the live market, and then another 9% in the after hour markets. And this stock was absolutely moving today. So just based upon your investment, for every dollar you invested, you got a 50 cents return. So if you multiply that by 100, 200, 300, you can actually do the math on that. So essentially, that's imperative to note, because when you look at it, ladies and gentlemen, investments are mathematical algorithms that are very simple at best. Now, when we talk about short squeeze and things of that nature, we have to also factor in all the other things that can go along with that. We have to factor all the other things that can going on with it. Because as I'm looking at this particular stock, again, I'm baffled at the amount of profit that would have been gained. Because here's my return right here, okay? Here's my return. Today I'm at 28%, okay? Roughly 28.5%. At a total return of $144. Now, the reason why these mirror each other is because, again, I invested $509 today, and now look at my profit. Okay, so sitting here, not doing too much of anything except investing, the only thing I've done is literally investing money inside this particular stock. So if you go back to today's review about this stock, and I was telling people, you need to invest in this stock. You may even want to hold it for the short term or for the long term. This is when we start getting into short squeezing a particular stock. And a lot of people don't really understand what short squeeze is. A lot of people don't even understand what short squeeze is. So let me try to explain this the best way I can. So a short squeeze occurs when a stock jumps sharply high, forcing traders who had bet that its price would fall to buy it in order to forestall even greater losses. Okay, it's similar to a pump and dump almost. I love this to call it a basic pump and dump. What occurs is a lot of investors will have a large accumulation of these shares. So take, for instance, you're an investor and you want to short squeeze the stock, or you want to control the stock. You want to buy it at the low end so you can buy more shares. So the stock isn't worth anything right now. And so you're going to start offboarding your shares. So what the Wall Street Bets Group did is the exact opposite. They start buying large accumulation of shares, which made the price rise. I've said this time and time before that when you really look at it, every stock has a certain volume. And when that volume decreases, the stock price goes up. When that stock price volume decreases, then the stock price goes down. Okay? Did I say that backwards? I think I said that backwards. But nonetheless, this is not how you make any money.
You can't make no money like that.
You can't make any money like that. And these are the things that we really need to be cognizant of because it's very, very important. Again, let me explain that each stock has a volume. Each stock has a quantity, okay? There's not this unlimited amount of a stock that you can buy. There is a limit, okay? So now if you have unlimited money, you can probably buy the most shares that any investor can buy. Let's say 1 million shares. But once that 1 million shares is up, you can't invest inside that stock anymore. And this is why companies like Tesla and Apple did a split to create more shares. It's kind of like, let me give you an example, okay? This is probably not the best example, but I'm gonna make it the best I can. Take, for instance, you had a whole book of paper, right? And you're down to one of your last sheets of paper, and somebody say, hey man, you got a piece of paper? And you're like, no, but I can split this for you. And so now, if you split this piece of paper 1, 2, 3 times, you now have different shares. Now one share just became what? Four shares. That's a 4-to-1 split. When people are talking about splitting stocks, what occurs when that happens is because you made more stocks, you increase the volume, usually that stock price goes down, and it takes for that value and price point of that stock to reach its previous point. So, volume. Each stock has a certain quantity, which they call volume. So when people are buying stocks, and that stock is very popular, the quantity of that stock, the volume of that stock decreases and the value of the stock increases. So you flip it. When that stock has a lot more shares, okay, the quantity of that stock increases and the value of that stock decreases. So hopefully we understand what I'm talking about. So with this particular stock, if we look at it again, because I believe it's important for us to understand what this stock has actually went through, okay? So let's just look over the past month. This is how volatile. And now at one point, the stock was, back in March 31st, the stock was $18.62. Then I believe right around here, this stock was $10. This stock was $10, ladies and gentlemen. And so what occurred was the offboarding of this stock exponentially had this stock throughout the course of time to decrease in value, to decrease in price point. Then it hit a snag. It's called Wall Street Bets Groups of Reddit. They started to short squeeze this stock and started to buy it up because they saw Wall Street was dumping this stock to buy more shares of this stock, okay? And here it is on the rise again. And this is where it ended up today at $28.82. Okay, so in the past month, this stock has risen 122 shares. Now, when I look at the technology, this is laser scanning technology. As I said this morning. This particular stock is into 3D printing, laser technology. It's probably also in nanotechnology. So it may become over time a very profitable stock. But groups like Wall Street Bets, they went in and they short squeeze it, and they even increase the timeline of you guys turning profit. And you know what that is? That's money in the bank. We have to really look at it like that. Give me 1 second. I want to just look up something very, very quickly to see if there are any messages on the board. And you know what? I advise everybody to go join the Wall Street Bets Reddit group. I think having the information firsthand instead of getting it secondhand will have you be a more informed investor. And you won't waste the amount of time that I've wasted before I've done that, okay? So again, when you guys have firsthand information like I gave you this morning, and I believe I bought in at the stock, if I can remember, the average cost of the stock with me was $22.43. See, right here, average cost for me was $22.43. So essentially, if I go back up here, I've made $6.40 per investment. And you know why I call that, ladies and gentlemen? Again, that's money in the bank. That's absolute money in the bank. I can't say it any better than that. Okay? So listen, when you guys are thinking about investing and you're thinking about just selling off some shares, some stocks, because they're not potentially making profit, they're not making you money, I want you to think about stocks like this. I want you to think about holding your stocks for the long term, because again, you're missing out on what? You're missing out on money. And that's a bad, bad omen. Because a lot of you contact me in the comment section. You guys email me and you say, hey, where can I put my money at? And how long should I keep it in there? No one can tell you that, because again, stocks like this just move. Like particular groups, not angel investors, but Mensa investors, Wall Street investors, Wall Street Bets Group, they all are controlling these stocks in a certain manner. Now, is every stock being controlled in some form or fashion? I believe so. I believe some stocks are actually dumped till they get to a very low price point. So certain investors can buy hundreds of thousands of shares, thousands and hundred thousands of shares. And for the everyday investor like you and I, the average person, listen.
You can't make no money like that.
You can't. You can't make no money like that. So essentially, I understand what's going on in this market today. At the end of the day, you know what's going on? This is what Wall Street wants from you guys. It's almost like they want you to gamble your money, because they know a lot of people are impatient. And at the end of the day, they
like some money.
They just want your money.
We like some money.
That's all they want. They just want your money. And if you guys are not patient, you're not going to make any money. For those of you who are very patient investors, holding your money in ETF, index, and some of those solid companies like Google, Amazon, yes, they're at a very high price point. But again, you have platforms like WeBull, Robinhood, Charles Schwab, Fidelity, Murray E-Trade. You have all of these financial organizations that are now mirroring companies like Robinhood, where you're not going to pay a commission price. And you also have other ETF-based companies, those exchange-traded funds, those ETF-based companies like Stash. Okay, you may pay a small nominal fee, but it's worth it if you're not going to take the time to really learn. Their platform is very intuitive. They have a lot of information on their platform that you guys can go in and read, a minute read, a 2-minute read. And I believe that's important, that you guys know something about the investment that you're putting your hard working money into. Because again, we're not gambling here, ladies and gentlemen. We are absolutely investing. And anyone is getting into investing for what? You're getting into investing to multiply your money. But unfortunately, like anything else, it takes time. It takes time to get where you want to be when it comes to investing. And unfortunately, there are certain stocks on the market right now that's being targeted that groups like Wall Street Bets or Satoshi Street Bets are short squeezing, but the fight is not against you. I understand that. The money making scheme is not against everyday people, even though it's hurting us because some of us are putting our money into these particular stocks and we're leaving it, and it may never bounce to where it was before. Case in point, I go back to the infamous, I go back to the famous GameStop. Let's look at what GameStop is at. This stock may never rebound again. Some of you got in at a very high price point. Some of you got in, let me look at the past 3 months. Some of you got in, and I hope you did not. I hope you did not get in when this stock was $347. I hope you didn't get in when this stock was $325, okay? I didn't hope you even got in when this stock was $193. What I hope is you got in when this stock was around $45. Because even if you sold here, you would have made at least 200 and some odd dollars on your investment. But what if you got in at the next pitfall at 120? Then I'm happy for you there because you probably made around $40 in your investment. But if you are here now and you invest in GameStop, and I've given this information out time and time again, leave GameStop alone. Leave GameStop alone. This stock right here, ladies and gentlemen, should be on your list not to, at any point, invest in. GameStop has been losing profit. GameStop has closed over anywhere from 800 to 1,000 stores worldwide. And that's trouble when you start closing your doors. Unemployment for the company is on the rise. Their earnings are their revenue doesn't equal out to earnings, meaning that you have operating revenue, but you're not making any money at the end of the day. If I go and I just made this door for fun, I may go and just check out how they're doing. So I'm gonna go to Yahoo Finance really quickly. If you bear with me, let's look how GameStop revenue versus their earnings is. Okay, so that's what we're gonna look at very quickly. But again, I want you guys to be very cognizant of MicroVision. I know I have around, I think I have about 22 shares of this particular stock. But I just want to show you exactly what I'm talking about here. All right. Case in point. The green is the revenue. Okay? I'm going to blow it up. The green is the revenue and the blue are the earnings. Okay? So we see this. And if we look at this, ladies and gentlemen. You can't run a company like this. This thing is keep popping up and down. All right. So in 2020, I'm trying to get the number here, but this thing keeps popping up. The revenue was $6.47 billion, while the earnings were $471 million. So yeah, you have generating revenue because you're still making sales, but you're not making any earnings off that revenue. And then again, if we look down here, the same thing for 2021. Now it has decreased. The earnings negative margin did decrease because of the short squeezing of their particular stock. This is no way to make any money when it comes to the company itself. And the Wall Street Bets Group and Wall Street, they were just playing tennis with this stock. I mean, if I'm looking at this timeline right here, ladies and gentlemen, they just been playing tennis with this stock. I mean, this is absolutely crazy because if I go back over the past 5 years, look at this. This stock was literally moving sideways. It wasn't really doing anything. It was moving a couple of dollars here, but it was on a slow decline, okay? And look at this. Let's get $3, $4, $5, $5. Then all of a sudden, Wall Street Bets gets involved in this stock. And then, shalom. This stock is worth $325 per share. And I just want you guys to see this as I'm just moving this timeline here. Absolutely ridiculous. Well, that's all I have to say, ladies and gentlemen. But tune into this channel, subscribe to this channel, support this channel. Coming out with good content, giving you guys that information. Tomorrow, I'm going to explain theta when it comes to the Greeks when you guys are option investing. Okay, it's very, very important that you guys understand at least the theta of the Greeks when you're talking about option trading, because option trading is one of the very cool ways of investing that you can make money more times than if you wouldn't. And it's not gambling. Listen, at the end of the day, that's what we're trying to make here. This is Financial Literacy 101. Learn money and be inspired. You guys have a great and wonderful day. I'm out.